Hey guys, Lance Martin with the Martin Group, and I am back for our February 2026 Real Estate Market Snapshot. I cannot believe we're already a month into our year. So let's go ahead and get going. Our QR code we've had forever, use it. It's got all the stuff on there. Market forecast stuff, it'll all be on there as well. We've got our new live event. We're a month away, 5+ weeks away. March 11th at the Highland Fairview corporate office. This is the kind of our second time back there, but we're back in March. Feel much better about doing our forecast earlier in the year as opposed to September like we did it last year. So tons and tons of stuff going out on that. I can't believe we're a month and a week away. So hopefully we'll see everybody on March 11th at the Highland Fairview office. I threw a chart in here. I'm going tomorrow. Some of you who follow my stuff, I'm certain probably are familiar with or follow Bruce Norris and the Norris Group. Tomorrow, which by the way, today is February 6th. We are 2026. Tomorrow, February 7th, I'm going to go spend the day with Bruce Norris and the Norris Group, and he is doing what he is calling this year Beyond Uncharted. And I decided to throw this in here for a couple reasons. Number one, I want to give Bruce massive amount of credit. I've been following him for, 20 years. He's a guru when it comes to reading the charts. I like to do it a lot, but compared to Bruce, I don't necessarily, I feel like I can't hold a candle to him. However, he always has a theme. He does an annual event similar to mine, but his is more of a market timing 8-hour live event that he does. But he always has a title. I believe last year was called Uncharted Waters. He had a boat and kind of rough seas kind of a thing. But the Uncharted Waters, it was a play on the actual charts. Bruce loves his charts. I have tons and tons of charts. And the theme beyond what last year was, man, these charts don't work, okay? I look at the charts and say, well, geez, based upon what's happened in the last 20 years, if I look at this chart, this is what's going to happen in the third quarter of this year. This is what's happened in the past. And I got that a lot from Bruce over watching him for the last 20+ years. So a year ago, he basically said, I got a problem. The charts are broken. It's very difficult for him to forecast what's going to happen based upon what's on the charts that he's looking at. So this year, I guess he's double downing. He's going to double down on that theme, and he's now called this year's event Beyond Uncharted. So what's next has never happened. So I guess what he's saying is he's looking at the charts. He used to be able to kind of draw some sort of conclusion on what his forecast was going to be. So apparently he's struggling with that. We will find out, but I'm sure he'll have an opinion. So I'm going to go spend about 6 hours with Bruce tomorrow. And then I will probably be reporting back on his findings and see whether I agree or disagree. So nevertheless, let's jump into our Southern California market update and jump right in with median price as we always do. I'm going to come over here to the end first. If you click into all these charts, all of the values month over month of increase. So we saw some slight increases from the end of December to the end of January, which is what we would expect. You always get those little choppiness, and we tend to chop our way down a little bit in September, October, November, maybe in December, and we tend to chop back up in January. Well, that's happened. So I point that out first because if you, by the way, you guys can click into these and you can go hover your mouse, but basically values increased ever so slightly month over month. However, if we take a look at the year over year, January to January, a little bit down in LA, flat in Orange, 2% down in Riverside, and 3.6% down in San Bernardino. If you watched last month's video, I was just really happy because all of the numbers were either flat or positive, basically the December to December number, what I call our year-end numbers. So we saw a little bit of an adjustment, again, for the most part, whether it's flat or up or down 1 or 2%, it really doesn't matter. But we saw a little bit of softening year over year, but just to go back to prove the point I made before, if you just want to look at the January numbers from December 31st to January, that 30-day gap, we are either flat or up. So I don't really care too much about single digit one way or the other or flat. Basically, values are stable. I'm very happy with that, and I think we all should be happy with that. Supply and demand for new listings. Again, same thing. If you go all the way over here, it's very difficult to see on the charts, but you guys can click into them. The dramatic spike upward in the month of January. That is exactly what we would expect. That is good. We saw that in our offices and pretty much everything I've been looking at. From January 1st through to today, we've seen listing inventory new. These are brand new listings, by the way, listings that came on the market in the month of January. We saw dramatic jumps up. I mean, there's pretty nice V's jumping up there, which is pretty much all of these V's are jumping up in January, February, March. So that's good, but similar to what I just said about price, if we look at the January to January numbers, we still have fewer listings this January than we did a year ago January. 11% fewer, 23% fewer, 13% fewer, 12% fewer. So we still have this inventory issue where things are not as much as we have, which again, I know I'm repeating myself, but it is what it is. We were griping that we didn't have enough inventory at the beginning of last year, then we started to get more inventory. Interest rates kind of threw a wet blanket on that. And now we're kind of back into that, maybe not as much inventory as we had. So even though the January numbers spiked up as far as new listings are concerned from December to January, we love that. If you compare them to a year ago January, they're still down double digits in every single county that we're looking at. So, but again, it's not the end of the world. It is what it is. These are all listings. Again, if you want to click into the chart, you'll see all listings. That's everything on the market ending January, up a little bit here and there. But again, down year over year, not quite as dramatic as the month over month numbers, the new listing numbers. But again, down 7%, 14, 13, and 11%. Not a big deal. I mean, it is what it is. The sellers are still kind of figuring out, can I sell into this market? Have interest rates impacted me? What's going on? So again, all listings and the new listings are still a little bit flatter than where we were before. Month supply, interestingly enough, month supply is also down. Makes sense, okay? There's not as many houses on there. So again, our month supply numbers, 6%, 12%, 11%, 19%. So again, that's good year over year. So I'm not unhappy with that, and we haven't really spent a lot of time on that. I will tell you, this also makes sense. Days on market numbers are up. So these are the biggest I've seen them in quite a while. And again, if you look over here, I just kind of have to go back and compare. This is kind of that COVID window, but pre-COVID, we're probably talking maybe into 2019, I suppose. LA County, 47 days is the average days on market in LA, 47 days average days in Orange County, 58 in Riverside, and 61 in San Bernardino. So, 2 months supply, or 2 months, not supply, average days on market in Riverside, San Bernardino County. We just haven't seen that in so long. I mean, we saw 2 days supply not that long ago. But again, I think these are healthy. They're fine. Just be prepared that if you're going to be listing your home, if you're kind of priced in there, playing it around, it may take a little bit longer than a week to sell. Having said that, Drew and Drake and myself, we just listed a house in Anaheim Hills, 1.3 million, give or take. Nice house, beautiful area, beautiful neighborhood. And within a week, we had a few offers, and we put it in escrow in less than 7 days. So nice home, nice area, correct price. Guess what? Amazing how these things come together. Pending sales. This is still the challenge that's just killing us. If you go back, remember I put those little spike ups in new listings and active listings and price. Well, we still have this dramatic spike. I mean, what's the blue county? Is that LA? Just look at this dramatic tail down in buyers and sellers. And by the way, that's not 1 month. That's several months, because we've got 15 years of data, and you guys can click into there and take a look at it if you want. But the sales are still trending downward. That's not normal, okay? Normally, we would see this trend to break all of these dips. If you click in here, almost every single one of these are December. And then in January, they start to tick back up. Well, that didn't happen in January of 2026. Now, sometimes with this data, you got to be a little bit careful. I get all this stuff from CRMLS. That data is completely dependent upon the real estate agents and brokers to update that data. So sometimes if a broker or an agent puts a property in escrow on January 31st, they don't always update the multiple listing service on January 31st, or they might not even update it on February 1st or 2nd. So these numbers do tend to potentially shift a little bit the farther we get into the month, and the agents are a little bit better in putting their data. Having said that, these are really dramatic lows for the pending side. So I don't know what to say. I don't want to be, throw a wet blanket, because this is the wet blanket that I'm throwing on myself every month. I'm like, God, I need to sell more houses. If you're a buyer or seller, maybe you don't really. Well, if you're a seller, you probably care about this, because these are buyers and sellers coming together. But anyway, this more personally impacts the agent, folks out there, and myself, the broker owners and the lenders and the escrow people that rely on transactions. So that's pretty brutal, as far as we did not see a very nice January sales season. And then that just translates into the chart right here. So this is January 2026 compared to January 2025. 36%, these are all negative numbers, 38%, 19%, 24% fewer transactions, buyers and sellers coming together in January of this year than came together in January of last year. So, I actually generally feel pretty good about how we ended 2025 and how we started 2026. Feel interest rates are a little bit better. We're going to talk about that in a second. Listing inventory seems to be a little bit better. We personally, within the Martin Group and what we've seen at Coldwell Banker Town and Country, are seeing some positive activity, so I feel good about it. But then I look at this chart and I say, well, crap. We're certainly, as an industry, as a marketplace, are not selling as many houses as we'd like to. It just is what it is. And again, these are not like single low digit, numbers. These are significant double digit numbers, 36, 38%, good God. So at any rate, so we'll see what happens. I'm going to go back a chart. Again, I'm not prepared to click into this, but if you were, all of these spikes going up, we generally, again, I'm repeating myself, but we see increases in January. This chart should start to trend upward dramatically. January, February, March, April, May, and then these are normally May, June. Then we start to chop around a little bit, and then we start to kind of work our way back down the scale there. So we'll see. So from a buyer-seller pending perspective, getting the guys together, well, January kind of fizzled a little bit. Okay, not a little bit; it fizzled a lot. So anyway, hopefully we're going to see that trend reverse in February. This did surprise me a little bit because, I don't look at the market all day, every day. I kind of gauge what's going on in our office, and we had a good January. Our office had a good January. It wasn't great, but okay, that feels a little bit better. It feels like we certainly had a better January than we did December. But then you look at this, I'm like, wow, maybe I need to go back and reanalyze. Did we really have that good of a January? Because the rest of the market didn't do so great. So at any rate, getting back to these numbers, large, double-digit lower pending sales from January to January. So we'll see what February holds for us. I did not do a Spotlight City this month just because I ran out of time, So we'll get back to that next month. Now, this is the part that's a little interesting, a little surprising. I do not have a chart for the new Fed. We have a new Fed chair coming in. I'm going to slaughter his name. I think Warsh, I apologize. I've been doing a lot of looking at what's going on with Powell. I've been obsessed with Powell. I hope I'm not going to become obsessed with our new Treasury Secretary, Warsh. If I'm not pronouncing that right, I guess I just embarrassed myself. But I think he's going to come in a few months. We shall see. Kind of got a little bit of buzz. We saw some interest rates maybe improve a little bit. But basically, we haven't really seen much of any change in interest rates now since the beginning of the year, which, again, is fine. So we're basically at 6.15. This is, you take all the mortgages, you kind of throw them in a bucket and you average them out. What are you looking at for a 30-year conventional fixed? Yeah, you can do a little bit better than that on a lot of types of financing. But we'll see. That's a good number, though. If we stick around a 6% mortgage rate for this entire year, which is entirely possible, sure, I think we'll be okay. Only because we've been getting used to this now for, 3 years, 3.5, 4 years. So we'll see. We'll see what that number does with the month of February and transactions. So my forecast hasn't changed. Prices flat, inventory flat, sales volume flat, mortgage rates flat. This is basically what I feel what we're going to more or less see, a very boring year as far as the residential real estate market is concerned for 2026. I will throw this out. I did just come back from the Inman News Conference in New York. I just got in last night. One of the speakers, I can't remember exactly who it was, but he was quoting Lawrence Young, who's the National Association of Realtors forecaster. And I got to go back and verify this, but anyway, this is coming from Kevin Brown, by the way. He's the new National Association of Realtors president, saying they are forecasting double-digit an increase in unit sales. I think his number was 16% more unit sales nationwide. So I'm going to go back and take a look at that and make sure I heard Kevin correctly. I would love to see 16% more unit sales this year. My sales volume number says flat. So anything above flat is a positive, and I will be happy to be wrong. But we'll see. I think prices are going to pretty much remain the same, and inventory is going to remain the same. So we'll see. We'll see what happens with the rates and all the rest of that. So as I mentioned earlier, we've got our real estate market forecast coming up March 11th. This is a live event, so you'll be able to click a link and get some tickets and all the rest of that if you're interested, and it'll be attached to the link that got you to this video. We're going to do our real estate and politics event in June. That'll be after the June primaries. We'll get more information on that as we move forward. I've got two other things I mentioned last month. We got a new series of videos we're doing. One of them is a market update on the landlord-tenant stuff with our Cobalt Property Management, our sister company. So if you have any interest in investing or you are in need of property management, we've got a new monthly feature that's coming out. And then the same thing in relation to homeowner. Oops, I went too fast. And we also do homeowners association management. So if you have any interest in homeowners association management, or you own a condo, or you need some help with management, we're going to do monthly updates, snapshots, if you will, for regular property management, landlord, tenant, single families, and the same thing with HOA stuff. So that brings us to an end of our February market snapshot. I hope you've had a great start to your year, and we will see you next month.